Welcome back. Now a look at where markets ended. An historic week soaring to new record heights after Donald Trump was elected 47th president of the United States. Wednesday's market cap surge was the fifth largest one-day rally in history. Then the Federal Reserve cut interest rates for the second time since March of 2020, this time by a quarter of a point. But Chairman Jay Powell said that he would not rule out raising interest rates next year, depending on policies put in place by the incoming administration. Joining me now is Crossmark Global Investment CEO and CIO, Bob Dahl. Bob, good to see you. Thank you so much for being here. Reactions from you on this historic week. Let's start with the Trump presidency and what new policies mean to markets and investing in the year ahead.
Well, most of us expected President Trump would win, but not many at all predicted by the margin in which we won, and that the Republicans would take as many in the seats in the Senate as they have. It's not a full mandate or landslide, but it sure moves in that direction. So I think that what it means for investors is the Trump agenda has a decent chance of, at least in part, getting through, and quickly. The president realizes this is his second and last term, so he's got to get on with it. So I think whatever strength we have in the economy will get a little bit more. Probably means slightly higher interest rates or less Fed cuts and maybe a little more inflation, but more growth, and rest of the world, look out. Here comes America.
Yeah, I mean, fewer cuts to me means that we are talking about a growth trajectory. Well, let's talk about the agenda and what it means for investing. One of the key points of Trump's agenda is going to be tapping into the energy capacity in this country. He likes to say, drill, baby, drill. Is there an energy trade or an investment that you want to talk about?
Yeah, I think traditional fossil fuels will have a more positive place in a Trump administration than it would have in a Harris administration. I would also not ignore nuclear. I think that's the future of the U.S. It's gotten a whole lot safer, and I think we will see more activity in that direction in energy, Maria.
And of course, President Trump is vowing to extend the tax cuts. What will that mean for the broader market? How do you want to allocate capital given all of this, Bob?
Yeah, wherever you were prior to the election, you've got to be a little more equity friendly and a little more bond unfriendly. And I think that's probably the right way to look at things. Growth, as you point out, in the economy. Earnings expectations are already pretty high. I'm not sure they're going a lot higher. And of course, we have to comment and complain about valuation levels and how high they are. So, yes, it's a positive backdrop, but it better be a positive backdrop to justify the earnings expectations and valuations we're looking at.
I mean, did the Fed commentary this week change anything for you? They cut rates by a quarter of a point, but then there's Jay Powell saying that there's a chance he will raise rates next year. I mean, isn't that counter to what we're talking about here? You're going to lower rates by 75 basis points this year and then raise rates next year?
Yeah, it'd be crazy, a little suicidal, and damage the credibility of the Fed. I think what he's saying is, hey, look, inflation's not at 2% where we want it. The Trump agenda is going to make it more difficult to get it there. And therefore, he's saying if we get too much inflation, we'll have to turn around. I think those probabilities are not high. Sure hope they're not high. A Fed raise would be really bad news for a lot of people.
Bob, great to see you. Thanks so much.
Thanks, Maria.